And welcome to another VSA video blog in my series of videos on my trip to Mexico in August. And this is the fourth and last one, but definitely not the least one. It's probably the best one in many ways, but they're all good. But I'm delighted today to have David Wolfin, the President, CEO, and Main Board Director of Avino Gold and Silver. David, hi, how are you?
I'm great, thanks. Thanks for inviting me on.
Well, obviously, you should be quite good because the silver price and the gold price are going higher and higher. And I think that's making everybody smile.
Yes.
Anyway, look, it was great to come down, come up. I'm not sure, but to see you. Let's just first of all explain to the viewers what you've got, because obviously I flew up to Durango from Mexico City. Your mine is the Avino mine is pretty close to the city. We just drove there, and of course
Yeah.
we will talk about later some expansion you've got, which is also very close. But I mean, do you want to just explain where you are? And also the other thing that I'd like you to just explain to set the scene is that this is a mine that has effectively been, and I put it in inverted commas, in the family, because your father first acquired it, 50 years basically.
Yeah.
And it definitely had that feel of a really nice family operation, very close with the local community. It had a very unique feel because of that. But do you want to just explain very quickly how your father bought it, how you've developed it, where you are, and that sort of thing?
Sure. He owned a brokerage house in the 50s and 60s, and he was in California looking for a brokerage business and was introduced to a wealthy Mexican man who invited him to come to Mexico to look for mines together that closed around the time of the revolution in the early 1900s. And so he sent a geologist down there, and they looked at a dozen projects and came back and liked this one, and it was available. There was no NAFTA at the time, so foreign ownership could only be up to 49%. And he felt that was better than nothing. So we acquired the 49% and we built a mill in 1974 on the old foundations. There was a smelter there in the 1800s. It was owned by the British, listed on the London Stock Exchange, as you know, and you can talk about further. But there was no mining after that until we got involved, and we built it in 74, ran it for 27 years. And then during the first tech bubble in 2000, 2001, metal prices dropped. And so we shut it down. I grew up working in the business. I worked in the mine as a teenager in the early 80s. And then I was in the brokerage business in the 90s, and then joined my father in the 2000s. And I told him NAFTA's in place. We should buy the other half of the mine. It was closed. So I was appointed president and negotiated to buy out the other half of the mine. That happened in 2006, and put the team back together and reopened the mine in 2012, I think it was. So we've been operating for since that time until COVID, and then we shut it down, and then we built a dry stack tailings storage facility. So now we're operating with 500 people there, one producing asset, and the idea is to go to three producing assets within 5 years. So from a junior producer to an intermediate producer.
I mean, you just whetted everybody's appetite there, David, by saying that it was once listed on the London Stock Exchange. And by the way, I've obviously checked, and I've even got a copy of or a picture of the share certificate. Just quickly tell everyone what that was all about, because it is quite fascinating.
Yeah, it was the largest open cut mine in the world in the late 1800s, owned by British, listed on the London Stock Exchange. I mean, the history goes back further. They say it was the first mine discovered in the state of Durango in 1558 by Captain Ibero of Cortez's army, who claimed to have found a mountain of silver, and they formed the city of Durango to mine it. So most people say, wow, there can't be anything left after 500 years, but they didn't have drill rigs. They just high graded what they could see near the surface. And same with our partners for 27 years. They were a private family. They weren't looking to find 20 years of mine life. So it created a lot of opportunity for us. And that's why I went after the other half of the mine and brought it back into production. We've done all kinds of drilling. We got three drills turning right now, 75 million metric tons. Uh, in a gross value, that's 100 years of mine life. But so there's plenty of opportunities for future expansions.
But just talking a little bit about what you've got at the moment, the main bit, which is the Avino mine. Obviously, I went
Yeah.
there.
Yeah,
I went underground. In fact, I had quite a few what I describe as underground presentations, which is always quite interesting as a broker to have your presentation underground. But I mean, there's actually you've got some amazing underground, whatever the word digs or whatever you call it. I've forgotten the word
yeah,
from it, but it's quite clear. I mean, you're they're very wide, they're very large. There's plenty of room compared with all the other mines I went down. But there's also clearly plenty of room for expansion just in the main Avino mine itself.
absolutely. Yeah, I mean, it's in geological terms, we're mining a stockwork system, so it's a mishmash of veins, and so there was three or four different mineralization events over millions of years, and what it created was this stockwork system. So it's big. It's and when it each pulse of magma that came up recalcified it, so it made it really strong. So it's really competent rock. So that's why we can mine it in huge widths. Like you said, we went down to 30 to 40 meters wide
Mm.
widths, and we're long hole sublevel caving, which is a cheap form of mining. And you can see that in our costs. The cost per ton is well below $100. Most underground mines are well above $100 a ton. So it's a cheap form of mining, and it's open at depth. We've extended the mineralization. So the mine where we're mining is about 350 meters below surface. We've extended the mineralization. We've doubled it to 700 meters. So there's plenty of mine life left. We're ramping down to these lower levels. We're mining in two different areas above, and we've got two drills turning. So there's a lot going on there. And we don't know where the mineralization ends. Nobody knows. We brought in two structural geologists, one Jeff Hedenquist at Ottawa and Tony Starling out of UK, ex Newmont, to help us determine what could be at depth, because there could be a giant mine below. We don't know. We don't know. So we're drilling it, and we're really excited. And stay tuned.
Mm. And then turning to the process plant, I mean, it's what I describe as a fairly standard process plant, which is actually very simple. You crush it, you float it, a few other bits and pieces, and you end up with a nice concentrate. And you've got a huge concentrate. I'm not sure shed's the right word either, but there's a lot of
Storage
concentrate
facility. Yeah.
facility. Yeah, I mean, it's again, it's very big. It's sort of on the side of a hill, but it seems to be working pretty well and has plenty of capacity, doesn't it?
Oh, definitely. Yeah, yeah, yeah. We've expanded it a few times, so yeah, it can hold a lot of concentrate.
Yeah. So now the two short term, well, I say short term, but I mean the next few years, the two bits of growth that you sort of got. The first one that actually is pretty exciting is La Preciosa, if I pronounce that correctly, which I think as the crow flies is about 19 kilometers away. We actually drove there. It was, I don't know, 20 to 30 minutes drive. It's very close. You can truck ore from that mine. You have just dug the main portal into it.
Yes.
And I think you're opening it in the middle of October. Is that correct?
Well, we're developing it now, so it's essentially open. So we've broke
Yeah.
ground in April, and we've ramped the main haulage tunnel 350 meters, and so we've intersected both veins. There's La Gloria and Abundancia veins that come to the surface, and now we're mining in both directions on those levels. So four different headings, and prior to the Abundancia vein, the ramps going down below to do more levels below. So that's what's happening now. We're stockpiling ore on surface from that developed area that we've intersected, and we'll start processing in Q4. So in the next few weeks, we'll start running it through the plant. So we're excited about that.
Okay, but that's obviously what I was thinking about, actually running it through the plant sort of
Yeah,
mid-October. Because I mean, it's fantastic when you can just, for want of a better word, dig it, and then there's a process plant next door that you can just process it. Because again, your costs come right down because the process plant's already there.
exactly. There was no large capital expenditures on this expansion. The expenditures are really light. and the equipment, we planned it months and months in advance. We ordered it. So we got brand new equipment from Caterpillar and Sandvik. Because we have an operating mine, we've been their customers for probably a dozen years now. So we have credit facilities, $5 million to $10 million credit facilities. So we get brand new equipment, which makes it very efficient.
I mean, you've got what I think they're called double drill jumbos or something. Isn't that what you've got down there?
Yeah, yeah. Oh, we've got 5 or 6 jumbos, I believe. Yeah.
Yeah. No, I'm going down it. It was very impressive. And then the other thing that I noticed when I was there, and I think you've got ambitions for, you do have a very big tailings dam, which has the potential for some reprocessing, doesn't it?
Yeah, we did a preliminary economic assessment, and came out with those results, and the results were very favorable. But they used metal prices that are half of what it is today. So we're going to rerun these economics, but I mean, the post-tax MPV was 61 million, so it's probably closer to 200 million now with current prices. But we're going to upgrade that. We've got engineers going down there before the end of the year. The drilling that's going on at both La Preciosa and Avino will go in a new reserve and resource estimate, and that's unique for us because we've never operated with reserves because the mine opened in the early 70s. The rules were a lot different back then. And when it closed in 2001 and I reopened it, I didn't need to do a feasibility study. I raised the money privately, rehired the same people, and reopened the mine. So, in order to be able to qualify to issue reserves without a feasibility study, you have to earn that in the eyes of 43-101, and that's with 90 million in revenue, which we've achieved. So, all this drilling is going to go to create more certainty for investors.
But I mean, again, I had a rather amusing conversation with an institutional client the other day and a Mexican miner, which was, what is your life of mine? And he said, well, the life of mine has basically been 5 years, but it's been 5 years since 1500. And that's a little bit how Mexico is, isn't it? I mean, you might have a life of mine that's a certain length of time, but you just keep finding more and more and more.
Yeah, you have to spend money on exploration. Humans don't have X-ray vision, so the best place to find a mine is where they're mining already or in an old head frame. So, yeah, I mean, there's opportunities there. That's what I did when I bought the other half of the mine. There was no 43-101 resources at the time because 43 was just being invented. So, but I knew based on what we were mining on surface, it didn't end. It continues down. And so there's a lot of opportunity at under or unexplored mines for sure in
And
Mexico.
it's worth pointing out, I think, because again, it's a debate that I have a lot with. Everyone goes, "Oh, Mexico, is Claudia Scheinborn good for the mining industry? Will she allow open pit? Will this be allowed?" A lot of people have concerns. I mean, I started this by explaining how your family had been in the area for so long. Just, I mean, you are in a very discrete part of the province of just outside Durango, but you employ a lot of people. You've been there a long time. I don't think the politics really matter to you, do they?
No, because they're pro economic benefits for their citizens, and we're the number one employer in this region. We employ over 500 people directly, but indirectly, think about the communities around. The welders, the electricians, they're all participating in what we're doing. And we're the number one employer in that region. It's just farming communities. There's nothing else. We're the best employer there. Yeah, we haven't had any indication that Mrs. Scheinbaum has a negative view of current operations. And
No,
with open
I do
pits, we
view
haven't heard anything negative on open pits either. So who knows? I think she's got
it.
her hands full with other things.
That could be true. No, I see it all as a positive. Now, I just wanted to quickly at the end turn a little bit to your cap table and structure and that sort of thing. You've performed quite well year to date, but so has the silver price and so has your business. I mean, you're delivering. You've actually now got a pretty sensible. That's pretty sizable market cap. You're in the sort of $600 million range, Canadian dollar, $500 million US.
Oh, hang on. We're 1.1 billion Canadian,
Oh,
800
one point.
million US. So,
I'm out of date by miles. This is what happens.
okay.
I think that was when I was looking before I went out. So you're
Okay.
1.1 billion Canadian dollar, 800 million US. I mean, this is a serious sized business now.
Yeah.
But again, what is maybe quite interesting is that you don't have many Canadian shareholders. You have a very unique shareholder list. A lot of them are actually US shareholders.
Yeah.
You have quite a lot of ETF funds. When I was out there, I came out with some of your shareholders, who, by the way, were really nice people and very supportive. Do you want to just talk through how that sort of evolved and how you see it? Because it is fairly unique.
Well, yeah, I mean, our domicile is in Canada, the mine's in Mexico, but and our primary listing is in Canada. But during the lean years for mining, it was hard to get any traction in the markets in Canada. So I went into the States for 15, 20 years, going all through the Midwest and the Eastern Seaboard, meeting brokers and fund managers, because I saw the opportunity was on the New York Stock Exchange. I saw the bigger companies trading huge volume there, way more than Toronto, and so that's where I focused. And they love silver in the U.S. The poor man's gold. It's more affordable. So, and Avino's leveraged to that because we've got a lot of ounces and we produce it at a profit.
So I mean, it's been a very successful strategy, should we say? And you, as you say, you've done the hard yards because it hasn't been easy all of the time. Um,
No, no.
you also have quite a few ETF funds that have invested in you, don't you?
Yeah,
I
like
mean,
about four or five of them, I think.
yeah, I mean, you obviously can't control what they do. It's great when they're coming in, but I suppose the danger is not so good when they're coming out. Although there's no reason why they should. I mean, as you say, you're a billion market cap. ETF funds are likely to actually, if anything, carry on buying you.
Yeah, because we recently went over $5 US. So then there's a lot of institutions in the US that don't trade anything below $5, and it's marginable in the US. So who knows where it goes from here? I mean, everyone should watch our news flow. We got 3 drills turning, so we're going to have exploration results, production results, earnings results. Reserve calc in Q1. So there's a lot of news flow coming in the next few months.
I mean, again, it was fantastic to actually visit the mine, David. So I did appreciate it. It was genuinely a very what I describe as comfortable, safe, professional mine that I visited, and just very, I mean, neat and tidy. It sounds silly because I don't mean that it was neat and tidy on your desk sort of thing, but it was just a very. The story in many ways is very simple, but a huge amount of upside.
Yeah,
You're not trying to buy this, and this, but some people are trying to. It was just, it's a lovely story, and it's well worth following, isn't it?
yeah. We're
I mean, why don't
focused.
you give a final? What's your final? This is why you should buy a Vino.
Well, we're focused and we're disciplined, and we have a clear path to transformational growth. It's not through M&A; it's through organic growth. So, one producing asset to 3. So, Avino's producing, making money. La Preciosa is coming online now. Big, big jump will be next year from the grade that's coming out of La Preciosa. Watch this year for the drill results from La Preciosa, because our resource grade was given to us by Coeur, who was planning a giant open pit mine with a lot of dilution. We're not doing that. So the drill results is proving that the grade is much higher than reported. So keep an eye on that. And then the third asset. So yeah, we're remaining focused, disciplined, unhedged, virtually debt free, other than equipment debt. And a lot of cash in the bank. We're, I think, north of 50 million US.
But I mean, that's gone up since I visited as well. I think you are a bit of, not quite printing money, but you are being very successful. David, it's been great to talk to you. Anybody watching this, if you want to learn more about the company, feel free to get in touch with VSA Capital or directly with Avino themselves. David can point you at whoever is the right person. But it was a great visit. Thank you very much for doing this, David. And good. Next time we speak, let's hope you're 2 billion market cap.
A pleasure. Thank you very much. I surely hope so.